to be with Tina Tambor from the Cromford Report, who is really, quite honestly, one of the smartest people that I know.
Oh, gosh.
And we're just going to talk about the real estate market and what is going on. I know everybody has a different opinion. Everybody is wondering, is this like 2008, 2005, 7, 8, all of those numbers? What's going on? What's happening to pricing? What should they be doing? What should they not be doing? All of those things. So I guess let's start off with maybe the biggest question of, are we looking at another housing crash like we did in 2008?
No.
Yeah.
Is that concise enough?
Very succinct, which I like.
Well, the thing is that there's nothing like what we're going through right now. There's nothing to compare it to. So you can't say this is like 2008 because that was caused by something completely different. Frankly, we deserved that based on what had been going on for years prior to that, that we could see coming far away. This we didn't really deserve. As an industry, the market had really recovered. We were healthy. We were responsible in lending. And this was more of a shock to the system. So can we compare this? No, we can't compare this at all. And so we can't even compare it to the 1918 pandemic because we're different.
Right. Very different.
So all I can tell you is the numbers don't say right now that we're that we're heading towards a price crash. And it's really important to define crash. Like when people say, I think the market's crashing, well, what does that mean for you? Does it mean that you think that we're going to see the number of sales decline? That's reasonable to expect. Really? Sure. I mean, how are people supposed to buy houses if they can't leave the house they're in?
Well, and we were just talking about that because the amount of people that are coming here from California, from other states that are more locked down than we are, cannot physically get here. So therefore, they can't buy a house right now. And if they're under contract, thank God we have, the coronavirus addendum now in our contract that basically states, hey, this is really of no fault of anybody's.
Absolutely. Yeah. I mean, exactly. So what's happened is that the market's been put on pause. We've technically, if you could imagine a hose, and we've literally bent the hose. So a little bit of water is getting through. So some transactions are being made, but for the most part, you've got not only demand backing up, people who intend to come here, intend to buy, and literally cannot leave their country or their city to get here.
And still plan on doing this.
Yeah. And then you've got sellers putting those plans on hold because of the lack of traffic. So the fact is we bent the hose, and the big question is when the hose is unbent and everything's allowed to go through again, what kind of pressure are we going to have? Is it going to shoot out like crazy, or is it going to be kind of mild at that point? And it really kind of depends on how long we're in shutdown, it sounds like.
Right.
So that's the big question. But the fact is, it's not reasonable to expect at this point that this will go on forever. And when it comes to prices, it's not reasonable to expect a 50% drop, like crashing in price. So most of the people, when they say, what I've read anyway, when they say they expect a 45, 50% decrease, they generally mean in sales, the number of sales.
Volume, units.
Yes, units. Yeah. Which again, we can see that. That's not a hard one to do because we can see that contracts have dropped off about 45% in the number of weekly escrows being opened every week. Yeah. That number has dropped about 45%. And frankly, that's expected. That's expected in a pandemic. Sure. That's reasonable. Yeah. But as far as how sellers are going to respond, they're not fire sailing their properties yet. We were one of the
it's funny. I've heard a few real estate agents say, our market has shifted. We are in a buyer's market. Sellers, you've got to be really careful. You really need to devalue your homes. That is not what I'm seeing either.
Yeah. At all. Especially in North Scottsdale, where we were discussing. In North Scottsdale, you've got a lot of sellers who have choices. They're not under the gun to sell their home, and they're more than happy to take it temporarily off market or just let it cancel altogether, wait it out and see where we're at in 4 months, 5 months, 6 months, and then just watch the market and see how fast it recovers and then place their house back on the market and hopefully get more. So again, in Scottsdale, you've got people who can weather these storms a little better than others. And when you look at the rest of the market, we have done such a good job of conservative lending that you have plenty of sellers with equity, a lot of equity. And they may or may not have to sell. And they've got really low interest rates. They've got low payments. They've got some savings. Then they might be able to weather the storm.
Right.
And so and they may not, in some areas, we're not seeing much of a slowdown in contracts at all. So as a result, if you're, say, in Gilbert, between 300,000 and 400,000, they haven't seen a slowdown at all in the number of contracts being written every week. So they are in no position to feel like they need to lower their price unless they are already above market value.
Well, and it's so funny that you said it. I just had that exact conversation with somebody that I talked to about selling their house just last week. They really thought their house should be priced higher. And I said, I'm just going to be really honest with you. Had we even not hit what we're going through right now, the number that you want, you couldn't have gotten. It just wasn't going to happen. So I get it. And I hear you that everybody was saying the market was so strong, so strong, so strong. However, my advice always to sellers was we really have to be cautious, might not be the right word, but we really have to use precision and understand the market and price it very, very accurately so that you're not on the market for too long and that, you're getting as close to your list price as possible. And if you go too high, it's just not going to happen.
Exactly. And there were a lot more sellers and a lot more listing agents who were willing when the market was hot. And it was insane hot, not just like regular hot. It was unbelievable hot.
Yeah.
And so, of course, you expect some people to just push that value, see how much they can get. And if the market responds and that you don't get any offers in 4 minutes, then you're overpriced. But the fact is, what's happening now is you've got more sellers who are getting more realistic that probably not a good idea to be overpriced right now.
Right.
Not even when it releases. You don't want to be overpriced. So they're not pushing the market as much. And they're setting their expectations on length of listing time. So when you go down 60% in the number of weekly contracts being written and accepted every week, when that happens, you automatically know I'm not going to sell my home in a weekend, probably.
Right.
It's probably going to be 3-4 weeks. I'm in it. And now marketing matters. Now the experience of your realtor matters. And all of the new creative ways of marketing properties online and virtually are going to come into play.
Right. I agree. So I'm gonna share a graph here so that we can show some of those numbers like we were talking about with why we are not in a crash, we are not falling off a cliff right now. So in price, right? So as we were talking before, and I'm sorry, this is live and we're just flying by the seat of our pants here just a little bit.
Okay.
So this chart is prices and supply.
So basically what we're looking at is a 20-year history of our supply and demand. And I think what's most important about this chart is to recognize that the demand line is green and the red line is supply and the line in the middle is normal. Okay. So if you consider supply and demand, when supply and demand are right around in the same spot, that means we're in balance. But where they are in relation to the line of normal means where we're going to go in the number of closings. So if they're both below normal, you can expect your closings to drop. If they are both above normal, you can expect your closings to be high. But if we're going to have a crash, supply in red needs to be over green. And if you look at that one section where they're really far apart
and the line in the middle,
crash, that's when stuff's going to go down and go down fast.
Right.
And that doesn't get there overnight. That doesn't get there in weeks. That doesn't even get there in months. That takes like a long time to get there, a year or two. So we could see the 2008 crash coming from a mile away. We knew that was happening.
Yet it still took prices a long time to come down in that.
And it was years in the making, years in the recovery.
Yeah.
What we have right now is something that has been weeks in the making and will probably be months in the recovery. Okay. So if you look at where we are now at the very end, you'll notice that demand is just now starting to go below normal. We're at about, and it changes every day. Right now we're at about 7% below normal. But you can see how low our supply is. Our demand is still higher than supply. So in order for us to even see prices go down or even go flat to the rate of inflation, they have to be together. And so that hasn't happened yet. And in order for us to see a crash, they have to completely pass each other and go reverse. And that hasn't happened yet. And so far, that could be weeks away if we continue on the path that we're on, okay, and say we don't open up business and we don't do those predictions. We just watch this. But the thing is that the longer we're in the situation, we could potentially see that. But if we are released, say, by middle of May, things might be different. Then we might start to see that level off. If they get together, the best that the buyers can expect is prices to level. Right. Okay. So in the meantime, you might have some situations where maybe appraisals aren't coming in. Appraisals are getting very conservative. Lenders are becoming very conservative. So say, for instance, you get an appraisal comes in, I'm just throw something out, $10,000 low. Yeah. $10,000 low. Now, does that mean that the property is going to close at that? That really depends on the buyer and the seller and the feelings around that. Now, if the buyer knows that they won that and there were 4 other offers on it, they may come in and cover that. Right. So keep the price. Or the seller could say, oh, well, that sucks. Tell you what, I will give you seller concessions. Will that help if I pay some of your closing costs and we keep the price up? And then they come to an agreement there, and then you still get the high price. So what happens is the negotiating process still occurs in that situation. It's not an automatic drop in prices, even if appraisals don't come through. So even so then, we're not going to know the response in price to our market today until the properties that are now active and now under contract actually close. And those contracts won't close for another few weeks. So, and again, what we're going to look at is, obviously what price did it close at, but we're also going to be looking at how many closed with concessions. And so, again, that is just something that we're going to have to wait on because we don't get that information until they close. So, what we're seeing today in our price appreciation isn't in response to today's market. It's in response to what was written 4 to 6 weeks ago, which feels like a lifetime ago now. Like that's like a whole other world from where we are today. So that's really what we're going to see. And so, but again, because we have so many areas of our valley that are still extremely hot, they still have literally more under contract than what's available for sale. This isn't going to be the same across the board.
Well, I mean, and I can say for the area that I'm in, which is the McDowell Mountain Ranch, our absorption rate still is like below 2 months. It's still so low. And I had one that was on the market, and then we temporarily took it off the market because of what was going on, and we had some stuff going on before that. And literally, I have gotten a showing request almost every day for it. So there's buyers that still want to see these houses. Although, it's like for, between my seller and I, we're taking extreme precautions to make sure that everybody stays safe in it. Lots of stuff virtually, lots of stuff, video and all of that to make sure that everybody stays safe. But the buyers are still out there.
Yeah. And the buyers are still out there. Now, whether or not they're going to bite right now, they may be waiting because maybe they think there's going to be more supply coming up. They don't know. But the fact is that, when it comes to contracts written, we still have a lot of people, like I said, on hold. Right. And so Scottsdale in the Northeast Valley has probably been the most hit by the blocking, if you will, of their demand. Blocking by barriers from California to here, Canada to here. Because if you're a Canadian and you want to buy a home here, you fly in and then you got to go into quarantine if you go back. So who wants to do that right now?
It's the same in Colorado.
Huh? Yeah.
And
so basically, and same thing with LA. If you literally by like decree or whatever they've got going on, they're very strict about you even leaving your house. So Scottsdale, which was benefiting from a lot of people moving here to retire, and high-end income people moving here from California. They've seen that when the hose was pinched, they really felt it. So they've seen, in terms of weekly contracts being written, up about a 58% drop in weekly contracts, whereas certain other areas of town, like Southeast Valley, has not seen that sharp of a decrease. They've seen a decrease, but it's more like 30%, 30 to 40%, instead of almost a 60% decrease. So again,
and that's just to clarify, that's a decrease in contracts written, not necessarily a decrease in purchase price.
Exactly. It's not about the purchase price. So prices don't always follow the volume, especially because when people feel that this is a temporary situation, they'll just wait it out so they can get their price. But it's reasonable to expect that we're not going to have as many literal escrows to work on. We're kind of bored as an industry right now, but I have a pretty good feeling that give it a couple of months and we're going to be super busy. Really busy when people are finally released. And they get a little bit of confidence in terms of their security of their job, their wealth, whatever. When a lot of this stuff settles down, I mean, the luxury market is dealing not only with the fact that they can't get here, they're dealing with the fact that the stock market's all wonky. The corporate profits are at risk for the first and second quarter. And if they're in any kind of manufacturing or shipping or anything, the exchange rates have been up and down like a freaking toddler having a tantrum. So the fact that, yeah, right. So, so basically, what that does is it makes people just freeze. Like, we're just going to wait for this to settle down. You can't make a decision when all this stuff's going on around you, like everything's on fire. So when it all settles down, which would possibly be months, not years, months to just settle down to where they can make a decision, then we'll have a better view of how much of that demand is going to come back. But it's reasonable to expect that at least some of that demand is going to come back. We're not going to go down to zero. There's still plenty of people who have plans to retire here, plans to move here, retain the wealth that they acquired. And those plans don't change. They just get put on hold.
Yeah. So I'm going to share a couple other little charts so that we can, and I'm sorry, I'm jumping around. I just think it's better. So this is all of Scottsdale.
Yes. So this chart is what we were discussing, which is the number of escrows written every week. So that's where we can show that the drop in Scottsdale contracts every week. But what we're really looking for, it's not supposed to be depressing. What we're really looking for here is this going to be a U? Some people thought it was going to be a V. We're really looking for when it turns back up. So we expect this part to happen in a pandemic when people can't do their stuff. But what we're looking for is it over yet? So we watch it every week to see when it starts to tip up. And when it starts to tip up and traffic starts to pick up and people start to feel better, then what you're going to probably see is a lot of these temporarily off-market listings go back on market. And then the marketing plans will start. It'll start working. It starts moving the wheels. It'll probably be slow at first. And then the unknown becomes known.
Right. Well, and like we were talking about, it's nice to see this chart towards the end starting to flatten.
Exactly. So you still see, so basically what we're seeing there is kind of a bottoming out. We're still pulling in. I think the number was 130. I don't remember exactly, but we're still pulling in. Some contracts are being written. So that part, like, there's still a chance if you list it, you'll, maybe get one of them. But it sets the expectation for the seller that, when you have a 58% drop in the number of contracts written, it's going to take a little longer to sell your home with that. And you're going to have a little more competition for those people. So this is where your real estate professional comes in and the marketing and the things that you guys do so well. It's, professional real estate professionals work in every market, whether it's good or bad. We enjoy the good times, but this is where we're getting our experience now.
Well, I mean, this is what I think. I was talking to somebody. I think this is my third or fourth market downturn that I've been in. So it's one of those things you just, inevitably, if you've been in the business long enough, they're going to happen. They're going to happen. Staying on top of stuff that you guys do, which I'm so grateful for, helps me so much educate my clients in looking at this. And remind me again. So the Cromford report, it's a subscription-based service that you guys provide. You guys analyze the data every single day. And what percentage of real estate agents in the Valley subscribe to that?
Well, it's been growing lately. But I would probably say probably about 1 or 2%.
Yeah.
And that's mainly because not all of the realtors who have licenses sell residential real estate.
Sure.
So
right.
The thing is that we are only here for realtors who are the real estate agents who are members of the Arizona Regional MLS. We have a data license with the MLS that allows us to download everything every day and analyze it just for the MLS members who are realtors and real estate agents. They're different. Right. So the fact is that they have to get this through you. We're here just for us analysts are here just for the real estate community to help navigate, especially times like these, to where you really need real data. You can't just go off of what some national analyst says they think is going to happen in your neighborhood, because they're going to have a limited amount of information and they don't have access to ours. So
no, and you guys get contacted all the time for news articles and things like that. You guys really kind of are the go-to real estate market analysts here in the Valley. And for me, it's like I can look at the numbers, right? And then I can take the emotions that I know from my clients and kind of meld them together and come up with what's the real story out there, what's really happening every day.
And that's really what we kind of need right now. We need trust, because there are so many messages coming in from every direction that if your seller or your buyer goes online and reads something, a lot of the headlines are either like it's all butterflies, rainbows, and unicorns, or it's an apocalypse. There's really no in between. And so it's real easy for people to be like, well, hey, maybe I'll just wait for prices to plummet 50%. Well, they're probably going to be pretty disappointed by that. That's not a rational or reasonable expectation at this point in time. Way too early to be proclaiming an apocalypse. Now, there might be apocalypses in other parts of the country. That's not us in the greater Phoenix. We were probably arguably the hottest real estate market in the country. So we have a long way to go before we're even at balance, and we have an even longer way to go before we're in a buyer's market.
Right. Perfect. Well, I want to be respectful of your time. I appreciate it very much. You are always a wealth of information. I appreciate all the stuff that you guys do for the real estate kind of world in general. Have a great day and stay safe.
Thank you. You too.
Thanks, Tina.